we'll start with everybody introducing themselves and a little bit about their products so everybody in the audience knows what they're doing. So, Sarel, please.
Hi, everybody. Good afternoon. My name is Sarel, and I'm from AlgoCharge. And for those of us who don't know who AlgoCharge is, then basically we've been supplying these green notebooks for the industry for the last 4 or 5 years. And I guess that's our claim of fame. And if you don't have one, just stop by at our booth next to the elevators and make sure you do take one. In addition to this, we're a payment service provider, and we work with many of the brokers on the floor here. Our claim to fame, I would say, is what we call the starter kit. It's a solution that we've developed that enables new brokers to get online and start processing virtually overnight. It's a very quick and cost-efficient solution. And as you grow with your business, we upgrade and upscale your solutions to match your growing business. We not only process credit cards, we also offer a very large number of alternative payment options, and we have our own internal risk management solutions all integrated into one platform.
Hello. Yes, my name is Stig. I'm CEO and founder of Nedania. Nedania is founded back in 1998, where we saw somebody at the internet streaming data, and we found it quite fancy. We thought, so why not try that as well? And that ended quite quickly with a chart, which got a good momentum in the market. We got customers like FXCM and Deutsche Bank, etc. It all evolved afterwards to exchange feeds, workstations, now also trading stations. We have quite popular mobile applications, but in general we concentrate on the client side. We do build algo services, and we expect a lot from these algo services, especially in 2015 and 16, and we are looking forward to that. So, thank you.
Good afternoon, everybody. My name's James Bannister from FX Ecosystem. Basically, I always describe our company as the plumbing of the foreign exchange market. We started 5 years ago predominantly on the banking side and sort of working down the tree. We're beginning to get more involved in the retail side as brokers and the users want to get a more sophisticated level of connectivity. The drivers, I think, in that market are definitely the speed element, and proximity now to co-location is a big buzzword that we see more and more from the retail side, which is what we were getting 4 or 5 years ago on the banking side. So I think, like all things, it starts with the more sophisticated users in the FX market, and then gradually it works its way down. And here we are, and people are talking about co-location at a retail level. So I'm excited to be on the panel and looking forward to it.
Hi, Christian Fram. I'm the founder and CEO of CFH Group. We started CFH Group in 2008 with the vision of really empowering brokers across the globe. And we think that kind of takes 4 different things. We think a broker needs a GUI, or front end. He needs a trading system. He needs prices, and he needs marketing. And we are sort of targeting those 4 boxes from 4 different companies. So we invested and founded Tradable, which is a play on the GUI side. We've invested and funded a company called CFH Systems, which is a technology business. We have a company called CFH Clearing, which is about pricing and prime. And we have done something in the marketing space, which we actually haven't announced yet. But we really see these 4 different boxes as 4 different things. And we have people that are really, really passionate about these 4 boxes. So I'm quite excited to be here, and I'm sure it'll be exciting.
Hi, I'm Jake Loveless. I'm the CEO and founder of Lucera. Lucera, for those of you who don't know, we are an on-demand, high-performance infrastructure provider. We service exclusively finance. I think probably the best way to think about it is we're like AWS for adults. We do on-demand, very high-performance compute, and then we run a global SDN that we service FX clients and equity clients and option clients with. And we also offer a matching engine that we kind of license out. We run it as a service, so it runs on the infrastructure. And we kind of came to this market a little late, and we had a little different view on how this would work. So we kind of have some interesting tweaks, I think, in how matching engines work for FX. And excited to be on the panel.
Hi, I'm Andrew Rossiter. I'm the CTO of Eds Securities. We're a full-service brokerage house based in, or headquartered in Abu Dhabi, from the Middle East. What makes us quite interesting is we have a very high capitalization. We had a $400 million injection of cash to start the business. We invest heavily in technology. We build all our own platforms. It's all managed from the Middle East. And we are cross-asset. So we're building technology that services FX, equities, OTC products, the full set of financial products. So the company has a very high ambition, and it's been growing very quickly. We're now about 3 to 4 years old. And we just set up our office in London, which is already full. So we need another office already. Yeah, so that's my intro. And I have one other little plug. We had, I don't know if those of you that came to our stand, we have a 1 ounce gold bar here, a real one, which is, I don't know if anyone's got the current spot price, but maybe $1,200 worth. The draw is going to be at our stand straight after this. So if you put your business card in our stand, you can't leave now, by the way. It's, we don't want the place emptying. But if you put your business card in, then the draw is at 4:30.
It's real deliverable gold, I guess.
Yeah.
Okay. This will start straight on about the FX market. One of the key items that people speak about, it's a highly fragmented market. You have all these different banks that are pricing and these ECNs that people are getting the liquidity from. I'm wondering on a technology side, what are the issues that we've had in the past, and how are companies making it better in order to deal with all the fragmentation? If you can go, Jacob.
Yeah, I'll start first. So, prior to Lucera, I ran high-frequency trading for Cantor Fitzgerald for about a decade. So, my therapist says I should use these opportunities to kind of get that out there. So I very much was a high-frequency trader. And so I'm kind of used to options and futures, and, kind of came to FX, and I was like, wow, this can't be that much data. And I think what we forget is, because we have these different streams, having come from other assets, this actually is a substantial amount of data. And of course, it's latency sensitive, and we've got some really, really high throughput problems to deal with. And you need to scale, and you need to deal with news, and you need to deal with all the things that we normally deal with, except there's no kind of deduplication. Every stream is independent. So I think you've got that, and then I think you've got the fact that you need to spin clients up and down. I think we're in it's not just latency of the actual system, but latency to turn up a client. I think is how we win business these days.
Andrew, you want to add something?
Yeah, I completely agree. I mean, my little plug is I've got an equities background and exchange-based trading. I ran Barcap for 4 years on the IT side. And I thought building an FX aggregator would be fairly straightforward.
How hard could it be?
How hard could it be? And but the key difference, if you think about it, on exchange-based trading, it is a lot more data. I mean, you're talking about consuming a couple of billion ticks per day, but it all comes from one place. And so that problem is tricky to solve, but it's solvable. The difference with FX is that it's just fragmented everywhere. So you've got less data from each liquidity source, but you're having to aggregate that across multiple ones. And that's a completely different problem to try and sort out. And if you add, if you try and solve that with parallel processing, then you also introduce a large amount of, you can't determine all the time what your latency is going to be. And that is a key thing I found in moving back into FX, whereas it was very predictable on the equity markets. If you could consume it fast enough, you knew your latency. But in the FX market and fragmentation, it actually makes it a much harder problem to solve. And it's harder to monitor as well. It's a complex process that you have to implement in order to monitor your latency.
Yeah.
Stig, I was wondering if you'd follow that, because as a market data company, you have to present these rates to your clients. So how do you, and it's an issue that a lot of brokers explain to us that it's a problem as far as how do they price their clients. How are you what are you doing with all the fragmented like FX data, and in order to get one specific price that you're showing?
What we usually do is that we take the top of the book and show the best bid and ask, basically. Yes. So we aggregate a composite feed based on that.
But what if that best bid and ask is not real, or it's coming out of the market?
That's not really our business to decide that. I mean, we are a service facilitator, and the pricing that we are getting through here are from the liquidity provider, etc. So we price and we show what we basically get there.
Okay. James, maybe you can add a little bit on how, on the distribution, how does a bank, how are they able to send out all this data to so many different sources, or so many different locations at once, and as far as on the customer side, how they're aggregating it?
I think what's important with what we offer is the meet me room that we've created between New York and London has allowed everyone to interconnect very, very effectively. The co-location between New York and London, the ability to be able to monitor the latency levels and how the operational side is going is very important. And quite often around NFP, we will put on our monitoring to see how we perform and how the different banks perform. And it's very interesting to see the consistency that actually you can get now with the right equipment and the right software.
Okay. So moving on to the different types of products, one item that a lot of brokers have to decide, especially for new companies, is whether they're going to be creating their own software or going to use a third-party solution. So Christian, as a company that offers both, there's, you're investing in your own technology and then also offering to your clients some other people's items. Yeah. You can talk a little bit about how you make the decision for yourselves what to offer to your clients and how do you market that?
I think the key is to figure out, to ask yourself two questions. What is a commodity? So what is actually not economical benefit for you to do? So, and the second question is, what can you win? How can you actually differentiate yourself? So the first one about commodity, right? I don't think it's economical for anybody who's not in the technology space to build their own aggregator. I think the same is true for a trading system. You have to be really large to economically benefit from doing your own trading system. I actually think the same for a trading platform. I think very few companies can benefit from having their own trading platform. I think they will outsource that. Even the bigger guys, the big global brokers, in 3 to 4 years, they will not have their own trading system because I think that's not a space they can win in. But I think stuff like the back office, where it's really about customer data, customer security, I think that's something you will see more and more brokers wanting to have themselves and really outsource the other things.
Okay. Andrew, you could tell us a little about, in your own experience of building your proprietary platform for the Oryx Prime, what did you discover went smoothly and what items that you thought would be a piece of cake became like the biggest headaches?
Well, we don't just have our own technology, and there is a place for having third party. There are kind of industry standards. In our space, MT4 is everyone wants that. So, but what we do is we have our own technology around the pricing engine. So we take the best bits of MT4, but we use our engine to price. I think so we had a couple of challenges. We're building a cross-asset platform from scratch, and there aren't many firms that have attempted that, and it's a very difficult problem to fix because you've got to be, like I was saying earlier, equities market is one challenge, FX market is another challenge, OTC products, products with delta and optionality, they're all completely different problems. So one of the key things is having a team that can solve all those problems for a start, and then and getting the decisions right, because if you start getting the decisions wrong, you turn a 3 or 5 year project into a never finishing project, a 10-year project, or it just fails. But in the FX space, we borrowed lots of techniques from options market making. So we effectively have a system per symbol. So euro dollar has its own symbol, sterling yen has its own system, sterling yen has its own system. And so we've put in a lot of parallel processing and handling of the market data. And one thing that hasn't been mentioned, it was mentioned on another show I was at, I think it was quite interesting. You know, a lot of technology over the last couple of years has been built in a low volatility market. There have not been big shocks. And I think it's going to be very interesting when volatility really comes back, which systems are going to be able to handle that. Who is actually doing stress testing of their platforms right now for the kind of volatility that we've seen before? Because if you haven't been doing that, then when it comes back, you're not going to solve that problem in a week. You know, you're going to be on the floor.
Well, with the volatility that we did have return in September and October, did anyone here experience any issues with their technology in order to adjust to it?
You're never going to get anybody to say that, right?
or from, well, it could be from vendors, not necessarily your own.
I think I agree with what you're saying, right? I think you know, you need to go with quality people, and you need to work with technology guys that does it for a living and like dreams about technology. So you know, I think there's a lot of people trying to be in the space, but there's a very few companies that really thinks about scalability, really thinks about what does it take to process all these trades, and who can actually you know, really maintain the speed when it counts. And I think we've seen spurts of that where, you know, non-farm payroll comes out, surprises everybody, and you know, you see latencies and these different things. So you know, you'll never get people to say that on the fan, right? But I think it's when you make a choice on technology, you have to be very careful, because it's, as you say, I completely agree. Very few people can actually pull it off when it counts.
Yeah, I mean, and you know, and I think we've said it a couple times, and I know a good chunk of us feel the same way here. You have to monitor it, right? And you have to be able to measure it. And how do you measure these things in real time? And you're right. You have to have a team, and ideally, if that team is not, you know, a lot of times we'll see you have a network team, and you have a server team, and you have an application team, and when you have that, what becomes difficult is it's like, well, where is this slow, right? So team A always says team B, and team B always says team A, and you know, the way we do it is, you know, we're a full stack shop. We have one title. It is engineer, and you know, we are a unified team with one mission. Non-farm payroll day at Lucera is like the happiest day ever, right? Because we love to watch these systems actually run at scale. And you talk about monitoring and measuring. Your network is telling you more about that market than you probably realize. Out-of-order packets, retransmissions, these are the silent car crashes of latency. These are operational risk detectors. Should I route this trade to destination A? If destination A is retransmitting packets, probably not a good idea, right? So, and kind of elevating that up a bit, I think, is interesting.
I want to get back.
Actually, I would add into that.
Yeah.
What I find very interesting now is the banks are starting to ask us for the information back around NFP in a much more granular way. And so we'll now regularly have meetings the week after where we'll show them the graphs, we'll explain what it actually means, how they performed, and they're beginning to understand this is much more critical than just having a reliable network.
Which is great. And then you go down and you don't just go from the network and you go to the system. And you know, I mean, I echo what you say. You have to love this stuff. I mean, there is a certain amount of specialization. Look, you know, we are talking about super nerds at the end of the day, right? So like I am among them. You know, this is the stuff that we live for. And you know, when you have failure, and you know, we've seen downstream failure. Failure teaches you something, and that's kind of, what do you do after you see that? I think that is important for the team.
Sarel, maybe moving on to the payment space a little bit. Quite a few of the conferences that I go to, when you speak to brokers and you say, what are you coming to look for? I often hear we're looking to see what's new in the payment space. Just wondering if you can explain a little bit why is the payment such an important issue for a product for brokers to really have down for the company?
Well, I think at the end of the day, what the broker is about is converting deposits. And converting deposits is the ability to process payments. And the ability to process payments is a complex issue. The more you move from, I would say, Central Europe, Central US, into the further out regions of the world, where access to credit cards, access to the payment options that we're all familiar with are less intuitive. And there you have to rely on additional payment solutions, local payment solutions, different local e-wallets and other such solutions. And as a broker, if you have to start dealing with all these remote solutions, both on the technical level, integrating with these solutions, or even earlier than integrating, locating these solutions. So being able to count on these solutions that they will process the payments for you in time and you will receive your money. Then integrating into these solutions, signing agreements with remote operators in countries that you have no familiarity with the legal system and the business system. That is a big challenge. And I think what we are seeing is that we as service providers, as payment service providers, are taking this role of, I would say, aggregating a very large number of local payment methods for our customers. And they're solving not only the technical issues associated with integrating with each and one of these providers, and it's not only the initial technical integration, it's also the maintenance of the technical integration and the optimization of the technical integration, just like some of my colleagues mentioned earlier. And I think this is where the place that the payment providers come into. And this is why brokers are always looking for additional payment options, more effective payment options to increase the conversion. I don't think it's so much about improving your costs, which is also an issue. But the main issue is improving, I would say, your conversion and your ability to collect the money from your customers. Because if you spend so much money on affiliation and marketing and sales efforts, and the customer is there at the payment page and they're not able to actually make and complete the deposit, this is a very big loss. And I think this is what the brokers is looking for, improving their conversion.
Can you give any specific examples of what payment providers like yourself or maybe some other companies are doing in order to make the conversion process faster?
Well, I would say there's basically three things. One is the initial point of contact with the customer, namely the payment page, and how do you optimize the interaction of the customer when he meets the payment page, and especially when the transaction fails. Because if the initial transaction goes by, then it's a no-brainer and everything is okay. But if the initial transaction fails, what do you do then? How do you now, in a very quick and frictionless process, manage to convert this customer? How do I identify what is the best payment option to offer that customer, which is already there on the payment page? You don't want to lose them, and you have to analyze where they're coming from, what they're trying to do, what their payment history is, and offer them a more appropriate payment option. Just for an example, there is a very popular payment option in the Netherlands called Ideal, and a customer from the Netherlands will usually prefer to use Ideal. So if you understand that this customer is coming from the Netherlands, you're better off initially showing them the Ideal deposit on the deposit page rather than credit cards or cashier, which is more popular in other countries. So this is one thing we do, or payment processors can do on the payment side. The other thing is on the technology and the integration side and the optimization side, in terms of making sure that the processes and integrations, which are usually very complex and require multiple providers in the process, and some of them are real-time, some of them are less real-time. How do you integrate that into one interaction or one interface for the brokers?
There's been a lot of talk now about mobile payments, thanks to Apple Pay and Bitcoin and different ones, especially as far as being reduced the friction to making payments. Is that something that you see is going to be taking place in our industry?
Well, Apple Pay specifically is a major breakthrough, and I think it takes people that really understand the payment industry to understand why Apple Pay is a breakthrough. And what Apple did for the first time, I think, is they've connected themselves with an existing technology and existing industry instead of using what they do best, and this is coming with a disruptive technology or disruptive solution and build something of their own. And here they finally understood that in order for this to work best, they need to team up with the industry standards, namely Visa, MasterCard, and American Express, and adopt their processes. So basically, Apple Pay in the payment industry does not offer something which is completely new that will require brokers, payment service providers, or customers to change the way they do business. So it fits very well in the way we all pay online and offline today. They just do it in a very more frictionless and more secure way. Regarding the, when and if we're expecting to see Apple Pay coming into this industry, I think we're probably a year or two away. Apple has launched this mainly in the US. It is currently only for in-app payments, which is something that is not very popular in this industry, or for NFC payments in physical stores. So once these barriers will be removed and Apple will take this outside of the US and enable payments not only through the apps but also through websites, I think this is where we will start seeing Apple Pay more predominant in this industry.
Okay. Sure.
We spend a lot of effort on payments processing at ADS actually, and it's something that we've looked at closely. And one of the things that we've been doing is looking at the psychology of how people pay, how they top up their accounts, and looking at other industries and how they've handled it. I mean, obvious things like Amazon, where it's one click. But people expect that. So if people are used to a simple process because they use it on Amazon, they use it at these e-commerce sites, and we are trying to bring that kind of process into our applications as well. I mean, taking it even to another step, the psychology of if you're about to be stopped out, you've had a margin call, and you're on your mobile trading platform, and you get a message that says top up $500, press the button, and then you're topped up and you can carry on trading, that massively extends how long your client is going to be with you. And at that moment, when they know they're going to be stopped out, is the time that you want to make it as easy as possible to take the payment. Similar issues that you've described. So we, in order to do that, we store people's credit cards and their data so that we can then just have a one-button process to top up their account. So I think it's a really interesting area, actually, because it touches, psychology of people, the technical side, and if you get it right, I think it makes a big, big difference to the number of clients that you acquire and how long you keep them for.
So continuing on mobile and the importance of it, Stig, maybe you can explain a little bit about the importance of mobile trading for brokers and how that's become a bigger factor for the amount of executions taking place.
Yeah, I think the only reason why it didn't take up 100% is because of the functionality, or actually lacking functionalities in the mobile app. I guess that in not more than 2 years, we'll see the majority of all trades going through mobiles in the market, that's for sure. We'll see larger tablets, and we'll get very, very close to what we know as a PC today. So mobile is here and will win for sure, that's quite sure.
So Christian, maybe you can add on that. When you're looking to invest in companies or create new technologies, are you still doing platform first and then mobile second, or have you gotten to the point where it's mobile platform first and then...
I think it's changed. So we looked at the mobile space for a long time, and we speak very closely with someone like Stig, right? I think he's one of the best guys out there for sure. But there's still been a lack in terms of how many people taking up mobile. I think just go back 2 years and nobody's really taking mobile that seriously. It was like an add-on. You didn't have any customers who just do mobile trading, and then I think that has actually tipped. So now you have more and more customers actually just doing mobile trading, and I think that trend is going like through the roof. So we've been waiting for a long time, and now it's happening. So take that to what we look for in terms of investing. I think it's tipped now. So we're actually looking to do like mobile-only stuff or investing in stuff like that.
Is there anything specific that you believe mobile products, mobile platforms should have? Because obviously you have there's limited screen size.
Yeah. So I think it's a trick, of course, of not putting everything you have on the desktop into the small mobile, and maybe there should be a difference between the mobile experience and the tablet experience because you have a bigger screen. But I think there's stuff that's really, really applicable for mobile. I mean, trading is one of them. I think education is another one where you just have a lot of time, where you could benefit from having mobile stuff on the education side. But in general, I think you will see more advanced stuff on the mobile and the ability to do more. But the application will be really specific to mobile as opposed to just copy what's on the desktop.
Mm-hmm. Stig, maybe you can add, we had our interesting discussion earlier about developing either on HTML5 or native.
Maybe I can add something to what Christian just said. When we talk about the mobiles, we all know that when you shut it down, it's shut down. Nothing can run in the background. And that means if we want to have the same as we have on the desktop, we need cloud services. And cloud services are actually the answer to the mobile. You have to run backtesting in the cloud. Even though you write your scripts on the mobile, you should be able to upload it to a server and run backtesting, and the results are pushed back to you, either emails or stuff like that. You also need to be able to run the scripts in the cloud. It's not enough to have these virtual services like we know today. You have to have a full solution, and we are very much concentrated on especially the cloud, because what these markets here need is services, right, to help the mobiles taking off.
So I have a final comment actually, because I think it's a really interesting area, and I think it's something that we should all pay a lot of attention to, the mobile space. You have now, if you look at the States, there's a company called Robinhood.io. It's in essence a brokerage business which is mobile only, at least as a start. And really they're saying we are the future generation of the traders, right? The young people today, they're living on mobile phones, so stuff like Facebook is a mobile phone, and they're not going to sit and download a trading platform like 5 years from now. So the younger generation will be a lot more mobile demanding.
Mm-hmm. James, I'm just wondering...
You haven't got a question for me on mobile because it wouldn't work.
No, but I'm wondering from on the retail perspective, because they touched on something very important, that there's more cloud-based execution and people looking to store their strategies on the cloud. Is that an area that you're getting demand from retail in order to create the infrastructure to do that on a co-location methodology?
Yeah, I mean, I think what's interesting is that as, and the great thing about the FX industry is that the mobility of people, and as you get people like Andrew that move to companies like ADS that are very well funded, and they can be forward-looking in how they actually look at their technology and their deployment, that helps us because we've already got the infrastructure and the connectivity and all the people within our eco world. And so in terms of being able to help the retail sector in co-location and hosting their servers within our racks and doing all the work that basically they've been doing on their own, perhaps in a basement in their office in Cyprus, for want of a better example, or on a fault line in a building in Istanbul. Not particularly great places to have your servers when they're connecting via the internet to get their liquidity. So being able to come to us and be able to host it and co-locate it is something that's absolutely our bread and butter, and we're seeing more and more of that over the course of the last 18 months.
Jake, maybe you can add on that. When you're developing, as you said, you're the AWS, but you obviously are when it comes to data hosting, are you also looking to co-locate in order to save on costs and sort of?
Well, we are co-located, so
okay.
we are in LD4 and MY4 and CH2. Is it to save on cost? It's a little expensive in there, isn't it? I don't know if we're saving on cost. It's expensive to be in these centers.
But is it easier to scale when you're using a data center instead of your own?
I think it's fair to say if I'd invested in Equinix 5
I
years
own
ago,
actually
I'd have
quite a
made
bit
more
of
money than I
Equinix
have
stock, so
today.
I'm glad that it's expensive. But but it is the fact that we're all there. I mean, the data center wars are over.
Can you explain
largely.
what you mean by data center wars?
I mean, when you go back, 10 to 15 years, depending on the asset, you kind of had all these different data centers, and then and you had this very large kind of MPLS style network where we had to all get to each other. And then, as time goes on and barriers to entry get lower and things move faster, we all get closer, and we've kind of converged on these centers, right? I think here in London, I think the center is LD4. When you get to New York, I think for FX the center is MY4. So we're all kind of here, And the fact that we're all in the same building and that we can all connect to one another, and then we can all, we're just a run of fiber away. I mean, I think that's why you co-locate. Of course, you want to be there for speed. Everybody wants to be as fast as you can. But it's the ease at which you can reach your customer base that, to me, is really a selling point. I mean, we have just a little under 400 cross connects and Wi-Fi. We are the Charlie Sheen of cross connects. Like, no amount of cross connects is enough for us. We will connect to anybody. And if you're not connected to us, like, come see me. We will run a line to you. But why? Because it lowers that barrier to entry, right? It allows customers to very quickly go spin up new clients and connect to new services. And I think that's what the next thing is. It's how quickly can you bring products to market and test new ideas and test innovation. You want to lower that barrier to entry. You want to be able to go to a meet me room. You want to be able to spin up compute. You want to be able to try these new things. And if they work, great. And if they don't, then you want to be able to turn them off.
I mean, look how far we've come in the last 10 or 15 years. When I was at Citibank in the 90s, we would be happily paying to put in a bit of fiber to Soros or somebody who was doing pretty high-frequency trading. And in those days, we'd be spending $5,000, $10,000 a month before we'd made any money. Look at it today, and you do it in a cross-connect.
Yeah, a couple $100 bucks.
The world's shrunk, and it's a different world. So,
Andrew, for yourself, when building a platform, after when co-location's been more or less fully developed, when you guys started, how did that made it easier for you?
With not wanting to repeat what the other guys said, that's all true. But I think there's also another point that it's actually lowers the cost of maintaining the platform. So for me, co-location is not just about the speed, because that is a small part of it normally, the final hop. But it's the ease of maintaining that environment. So once a big thing in customer service is people relying on your platform, and is it going to be there during non-farm? Is it going to be up? Is it going to are you always going to be there? And so you can get a lot of stability by being co-located because you're in that same ecosystem as everyone else. So that's another point to it, I think.
Are there any, because people always talk about the benefits, but are there any problems that brokers that are looking to co-locate should know about before they start getting involved with it, other than the prices, but which aren't that high?
Well, it is expensive, yeah. I mean, it costs us an enormous amount of money to be in these data centers. I mean, they're eye-watering amounts when you put a full platform in there. I think,
Are there different maintenance costs that people should know about?
But it is expensive. I mean, one of the things is space is going to run out, so we have to kind of reserve cabinets and then pay for them even though there's nothing in there, because we want our cabinets all to be together. So we're paying for stuff that we're not even using, but we know we're going to expand, and in 3 years' time we're going to need another 5 cabinets.
Brokers should have costs, expected costs really on.
Yeah, but this is where, just plug in these guys, this is where these guys come in, because, and I'll let you talk, but the ability to spin up and spin down systems is really important. It's not so important for me right now, but I can.
Because you're at scale.
Yeah, but I can see that coming also, to our platforms as well. So, and maybe that technology becomes a bit more commoditized, and we can all make use of it. Right now, it's pretty specialist, right?
Yeah. So I think I think the key question is, can you operate at scale, right? And if you're not taking down a full cage, right, like kind of we are, you're not operating at scale. You just can't. The economics are too painful. Because the real estate's really expensive, awfully expensive, and the power is really expensive. And I think the other thing, and we've talked about this many times, is you need to kind of be committed to that upgrade path, right? That I am going to keep these systems for a period of time, and we're going to have a nice maintenance schedule. A lot of times when we deploy infrastructure, it's like, oh well, and sometimes it's the guy who knows how to use the Dell website, right? Goes, buys a bunch of servers on Dell, and you're like, well, I deployed the servers and I'm good now. Well, no, things break and systems wear out, and you have to have a plan to kind of upgrade and maintain this stuff, and that means having feet in the data center.
And you need high-tech skills. I mean, that's a barrier to brokerages maybe that haven't got the ability to have their own tech team. It's not simple technology. You can waste a lot of money and not get a very good result. And you can also spend not very much money and get a great result if you know what you're doing.
Yeah, I mean, I think, let's be clear, the retail brokers are now beginning to get the benefit of scale that effectively our early clients paid for in creating what we've got today. And that's not just with us, obviously, it's across the market. So they're getting the benefit of being able to come into LD4 or NY4, be able to have access to a huge amount of liquidity within that data center, huge infrastructure benefits. I mean, you know, if you did it 5 years ago as ADS, it would have been 3 or 4 times more expensive than it is today. So, you know, they are getting the benefits. They're coming. They're trickling down.
So when it comes, you mentioned about having the correct experience, and so if a broker is looking to maintain their own servers, what type of IT experience should they make sure they have on their staff before they just say, if they don't have that, just use a tech provider and have a third party, not bother doing it themselves?
Yeah, I mean, it takes a particular type of person. I think, you know, you've got to find someone that's very customer focused. You know, so it's not just as, you know, standard technical person that you need that will just, you know, maintain the server. They've got to be very proactive. You know, a lot of things you can spot before they happen, and you need that kind of mindset, the kind of person that, you know, won't just leave the status quo, that they're constantly checking the system, improving it. And they, you know, they are out there. But you also need the experience. And I think, you know, it goes back to something I said earlier. This environment has been pretty easy to work in from an IT point of view. You know, when I first saw the trades coming through on Barks at the beginning of the crash, and we just looked at each other afterwards, and our volumes had gone by, you know, 3 or 4 times our previous high, and the system was still running, and we looked at each other and just thought, you know, what was that? You know, so if you've gone through that environment where you know, you've been tested, you know, I think you need those kind of staff as well, because it will come, you know, and it will be an issue. And if you go down, it's very easy for someone just to switch to another provider.
Man, talk about hitting the sweet spot at the bat of that question. That when the failure comes, and it will, right? Because you don't need one of these guys, by the way. You need at least 3, because it's a 24-hour market. How does that team? How trained is that team to respond? You know, the people who maintain our servers, you know, they have, I would say, an almost unhealthy relationship with them. You know, when bad things happen, they are the most calm people, because, you know, you have to practice this stuff. So, you know, that is a whole discipline. We're not running websites here, so.
Just going to move from the back end to the front end again. I'm curious to know, when it comes to interacting with traders, what are the trends that you're seeing, Christian, as far as what traders are looking for in their type of front-end platforms?
I think the front-end space is a really, really difficult one to get right. There's actually only one company that's really getting it right at the moment, right? We all know that's MT4. A bunch of companies try to do different things in this business. I think a lot of large brokers have their own platforms. Most of them want to keep the traders on that platform, but really people are just asking for MT4 and asking for MT4. And the way we looked at it is, if you want to do something new, you have to do something different. We didn't try to copy what was already there. We said we want to create something completely new. Really, just like you know, the mobile phone space. You know, we didn't want to copy the BlackBerry. We wanted to create an iPhone which was different apps and different things. And I think if you want to be in the front end space, you have to do it for a living, and you have to do it when you go to bed at night. You have to think about what does the end customer wants, and you have to have a company that's focused around that. And you know, they're really getting more and more complex, more and more demanding. They want different things, cooler things. We talked about mobile stuff. More stuff is going mobile. So there's all these things happening, and if you want to create that within a company, I don't think it's going to work. I think you need to, I wouldn't say outsource, but you need to work closely with somebody who does it for a living. So we do it in Tradable. We work very closely with Stig, I think, who also has this mentality of being close to the customers. I think that's kind of the trick. You know, it's more engagement with the users, and that doesn't come natural to most brokerage businesses. Yeah.
Stig, maybe you can add on that, because you've been creating front-end products that are being used by traders for a number of years. I mean, how have you seen the industry evolve and the demands from traders?
I mean, let's face it. We are working with an entertainment, right? And I don't think that will change. Even though users can read that investing in stocks, forget them, perform better than if they do it themselves, they will continue to do it because it's exciting, it's challenging. They want to beat the market, etc. So it is about to give them these tools. I started in my first dollar market. I traded in 1985. I was just selling dollars. I thought I was a hero because the dollar was falling and made a lot of money during that. And then later on, I found out that I knew nothing. And I don't think it has changed at all since then. A recent survey show that from 2,000 university teachers show that young people today don't want to open a difficult book, right? And they actually said they're getting more and more stupid. You know? So we are safe, yes, in what we are doing now. When I have a dream about what it has to be when we are looking forward. I want to have a multi-asset platform. We were, you know, everyone here was more or less crying about the low volatility while the stock market was trending upwards. And why try to trade something that is not trending, right? So we have to have a multi-asset platform to offer to our clients. The next is that we cannot leave it to a trader or a sales trader to make the prediction in the markets. So we are looking for robot trading. We are looking for to build robots that can look through the markets, come up with some suggestions every day for the individual trader that he actually can look into. It's not automated. I think we have seen it all. I mean, the traders, private traders around the world, they're moving around. One day it's MetaTrader, now it's social copy trading, and then back again, and they don't find really what they are looking for. I mean, if social copy trading were working, there was no reason for us to sit here, right? And let's not kidding ourselves and say we can build platforms that everyone can use and just can make money and so on. But let's realize that we maybe can do something better that maybe can prevent people from losing their money within 3 months, as we see in many places. So it's about to get down the leverage. It's about to offer risk management, and yeah, I follow this path down here. So
okay, so we spoke a little bit about the co-location and aggregating. So I want to move to payments and aggregation. Sarah, if you can explain a bit, is there a benefit for brokers to work with multiple different payment providers in order to provide the most efficient payment service to their customers?
Well, typically, I think all of our customers can testify that I suggest that they use an alternative provider for redundancy, for backup, for optimization of approval ratios. But there's a difference between having two providers. One is a lead provider and one is a backup provider, than what some of the people I see do have 5 or 6 or 7 providers. And then they split their traffic over these multiple providers. They have very small volume with each one of these providers, and they don't enjoy the benefit of having better relations as a bigger customer with 1 or 2 providers. And I think that is a mistake. So yes, I would suggest split your business between 2 providers, have backup, have redundancy, but use the benefits of the volumes you have to get better prices, better conditions, better terms. This is when it comes to the plain vanilla, I would say, credit cards. When it comes to alternative payment options, you would typically see that the monthly volumes that a specific broker processes through a specific alternative payment option would tend to be relatively small. Overall, we're talking that about 20% of the business comes from alternative payment options. So even if a broker does $1 million of deposits a month, across all his additional payment options, he will have 200,000 that is spread around 4 or 5 or 6 or maybe 10 different payment options. Then there's not enough volume or enough effect on the business to keep multiple providers. So for credit cards, I would say yes, keep 2 providers. For the other alternative payment options, I think you're safe enough to use 1 provider. Again, as long as it's a good provider and you see good performance, but there's no use to have multiple providers on the alternative payment options, I would say.
Great. I guess now we'll turn to the audience if anyone has questions.
Hi guys, Andrew Rowlich, CEO of 10. I enjoyed the infrastructure discussion a lot, and I agree and also feel the pain of some of the quite expensive data centers that exist out there. And my question to the panel is, virtualization technology is becoming more and more prevalent in other industries, but due to the sensitive nature of latency and things in our space, it hasn't quite taken hold. Is anybody on the panel using virtualization in their infrastructure now? Maybe not for core trading systems, but for other aspects of their infrastructure. And if not, what would it take to allow virtualization to allow us to scale more on bare metal hardware and use a little bit of that real estate that's quite expensive in these data center locations?
Man, it's like, hold my beer, I got this. Man, I just... Come over and give me a hug when we're done here. Virtualization is great because you get server consolidation. That's the original design goal, right? I'm going to take a bunch of machines, I'm going to crush it down on a piece of hardware. And you know, it's also great because I can take a machine and I can make it bigger and I can scale it. But the problem is when you virtualize at the hardware level, right? Like Amazon, like VMware, like, you know, all these other things that are just frankly garbage. I'm going to give you virtual DRAM and virtual NIC. There is no way for me to tell that lie to you and for that to have performance. It cannot be done. It is impossible. And this is technology, but we've been working on this for almost 50 years. Like, that's not gonna get fixed. The way that we do it, kind of where we see the world of virtualization, is to do it at the OS level, right? So I can take an operating system and I can punch you out a machine, a zone on that operating system that looks, acts, touches, feels, and smells like it's own machine. You can reboot it, you've got root on it, and yet it is running bare metal. So, you know, in-house we do our own kernel work, so ours is built on technology that comes from Sun, built into Solaris, you know, Sun Microsystems, may she rest in peace. But the other one is in Linux is, you know, kind of Docker and looking at containers there. So I can tell you we are running incredibly latency sensitive systems with OS virtualization every day. We are certainly running the highest amount of those in finance beyond a shadow of a doubt. So it absolutely can be done. And you can be in low single-digit microseconds there.
James, can you add a little bit on from your clients?
No, I think he said it all, actually.
He did it all.
Okay. I mean, I agree. It's the way it's going.
Yeah.
I could add. It's an interesting and a slightly funny question when you think about it, though. So you're talking about small amounts of latency with virtualization. So if you don't refresh your hardware every 3 months and follow Intel's upgrade plan, then effectively your hardware is going to be slower than virtualization anyway. So we accept 3-year lifespan of hardware, but then we talk about tiny fractions of a second in virtualization. So I think it's you know, I personally don't like virtualization for different reasons because I find it, you know, it's not deterministic. There are variables I don't like. But I think from a performance point of view, I think it's pretty moot nowadays because your hardware, you know, would need to keep up.
And I think that gets back to you've got to be willing to kind of refresh that hardware. You're right. If you're waiting for the talk on the TikTok schedule, you've thrown it away. And then the other thing is, you know, the ability to instrument the system, right? I can tell you, having, you know, done this with customers day in and day out, it is a very rare day that the latency is in the hardware, right? Okay. You have to be able to instrument that application, right? So.
Okay, I think there was another question from the front.
Lack of adequate back office or reporting systems coming out of MT4. Has anybody got insight into how we can get proper reports from MT4? Because just from a regulatory point of view, they're not efficient. Especially when you have one or more MT4 servers or combining other platforms.
Christian, is that something you can answer?
I couldn't hear the question, sorry.
So the question is, from a regular point of view, the reports coming up MT4 are not adequate. Yeah. So does any of these technology providers have any solutions for that? Because I'm finding there's nothing at this exhibition here addressing these issues.
Yeah, I think there's a lot of people doing add-on reporting to the MT4 server. We have in CFH our own reporting suite, but we also work with a number of the bridge providers that is very, very good at the reporting side. And so I think it's definitely an area that's been around for a long time, and a lot of people do it quite well. So yeah, it's possible for sure.
Any other questions?
Hi, Paul Smith, Mobile Trading Partners, London. This is actually more of an observation, but maybe you'll have something more to say on it. For us, the reason for co-location is so that we don't miss anything, because the peak might be hundreds and hundreds of thousands of notes, of packets coming down a second, going down to thousands, going back up, and the routers in between on the internet will just lose stuff. So for us, we have to be co-located, otherwise we'll miss it.
You guys all agree with
Good,
that?
excellent.
Just want to finish with one last question. Within your respective industries, is there any type of technology that's up and coming that you guys are excited about, that not necessarily that you're using now, but you see is coming that you will be using in the future?
Yeah, there is one thing. I think, go out on a limb here, I think it's going to be as big as the internet. I think there's this technology around the corner that will be as disruptive. So about 18 months ago, I heard about this Californian company. There were 3 guys in it. I bought what they had, cost me $300. I was chatting to them, they wanted $50,000 for some investors, and then 6 months ago, Mark Zuckerberg bought them for $2 billion. And so they went from nothing to a $2 billion company in 12 months. I'm not going to say what the technology is because we're playing around with it, but you can just Google that and find it. And I truly believe it will change many industries.
But it's a communications type of thing, or is it related to our industry? Or
I think it has the potential to completely change retail effects.
$2 billion, okay. Everybody's got the Google on that?
Well, if you think about it, Zuckerberg has a platform with 1.3 billion users, and he saw this other platform, and he decided that he had to have it. So that platform that he's bought is going to have 1.3 billion people on it.
Sure. I don't know if you can top that, but...
we kind of have some back office kind of systems that run, kind of at scale, and we're always, kind of looking for better disk, cheaper disk, faster disk. So something that we actually have in the lab today is basically solid state storage or non-volatile memory in the DIMM. And so we're kind of building these thinner, lower blades that you can have, 2 terabytes of solid state in the DIMM itself. You can get really fast read and write, which is great for like ticker plant logs and things like that. So, and I think that's probably 6 to 12 months out.
Yeah, I think, as I said, I like the education space a lot. I like the mobile space a lot. I think that has a huge amount of potential. And I still think everybody's still looking for the next replacement of EAs. What is going to be the next thing in this business that's going to have a sort of similar traction? Maybe like taking automated trading to the next level. And I think we keep looking for stuff like that.
I think what excites me, and we're looking at it at the moment, is being able to basically have one piece of kit in the rack to do everything, rather than switches and routers and everything and separate servers. And that consolidation is going to do a number of things. One, I seem to make Equinix a fortune every month. We can all relate to that. Yep. So less power, less space is good for me, good for my clients, and bad for Equinix, which is probably a good thing. Right. So I'm excited by that type of technology, and that's coming. It's very, very expensive. I mean, huge 7-ticket clips to buy that type of kit now. That will fold down, and I think that's what will be the future in terms of server, switching, routing, everything into one box, and that's when you'll get the ultimate low latency environment for everybody. Yeah. It'll come right down to the retail broker.
Yeah, I mean, and a lot of that's there now, the converged server switches.
Stig, please?
Yeah, I'm more thrilled maybe about the super internet. You know, we see it already. We see crowdfunding. We see private starting driving taxi for a company called Uber. And next year there will be a new company called Robinhood.com, which with money from Google will start offering stock trading at zero cost, zero commission. And it's a changing world where we'll see large businesses, as we already saw with news media, etc., that will simply die. And I think that's probably some of the most interesting that happened, that you as a private person, two-person, can build, as you saw before, a product and get huge successes. We didn't have that without the internet. So, yeah.
I would like to outline maybe two issues. One is in terms of the technology, and that is the introduction of stronger business intelligence tools. A lot of people are talking about big data, and at the end of the day, the brokers and the data associated with the payment processing and the trading is essentially big data. And we are going to integrate big data analysis capabilities within our systems, because I think the exposure of this data to the brokers will provide a lot of value to our customers. The other thing is more on the new payment options, and I would maybe point out the crypto technology solutions like Bitcoin, where I think we will see them being more dominant in the coming years. It's a bit too early now. The regulatory solution or the regulatory scheme around Bitcoin has not been completely solved. There's a lot of KYC issues associated with people using these anonymous crypto technologies. But I think these issues will be overcome over the near future, and we will see them taking a more dominant place in the payment industry.
Thank you very much, everybody. And thank you for listening.